Hello and welcome. We've seen some interesting changes in the Indian banking environment. There's a new governor, there's a new interest rate environment, perhaps not quite expected. But let's get a view on how things are looking in the banking space, but more importantly in the broad business environment from Shikha Sharma, Managing Director of Axis Bank. Shikha, thank you very much for speaking with us.
Pleasure.
So I know this sounds like one of those interviews which is going to go all over the place, but let me start with a straight question on how do you see the sort of new regime when it comes to the central bank?
So I think very early days, but clearly we have someone out here who has a lot of global experience and a very sound understanding of economics, monetary policy and fiscal policy, I guess. What we've seen in the two announcements so far is willingness to think afresh, think of big liberating moves and setting an agenda which is forward looking, right up front out there. So I think that's refreshing and good.
So
and
which are the two things that you felt were liberating and forward?
So for instance, doing away with branch licensing and saying here's a set of guidelines and go ahead and do that. And you know, clearly indicating that there was an openness to innovation around financial inclusion models, or willing to rethink how to handle asset quality issues for banks. So I think a fair degree of openness and as I said, fresh thinking is what one saw.
Right. Are you also expecting the environment to get more competitive, not because of the new central bank governor, but you are going to see maybe more banks in the private space come in. Are you expecting things to change?
So you know, we already have a fair amount of competitive banks out there in the Indian marketplace. I think you have over 40 foreign banks and you know, another 50 odd domestic banks across the public sector and the private sector. So there's a fair degree of competitiveness, but each one has, you know, concentrated on a particular space and has a specific strategy and is done well. And India is a very underpenetrated market still as far as financial services is concerned. So I would think that the coming in of new players should hopefully bring innovation. It of course depends on how many new players come in and what are the kind of players and what their goals and objectives are. But you know, if you would get another couple of high quality players who are interested in building a long-term franchise, I think it will only be good for the growth of markets and for innovation.
But do you feel that new players will necessarily create new markets as well? Has that been the experience in your understanding in the last few years?
So, you know, if I look back at insurance, which is what I was doing before I moved to Axis Bank 4 years ago, and look at what the opening up of the sector did for insurance, then clearly the entry of new players looked at innovations around products, channel, marketing, talking to the consumer, servicing the consumer, and that did help in growth of the market. Then of course there was regulatory change which impacted the sector, but I think new players did bring innovation. If we look at the last time round, you got private sector banks to come in. It did bring innovation in terms of, you know, the whole focus on e-channels, for instance. So I don't know what the new innovation will be that will happen in the next decade, but I'm sure when new players come in, they will come up with a new competitive strategy to be able to find their space in the market. And that should definitely spur innovation.
Right. So let me come back to the interest rate or the operating regime today. How does that look to you from the point of view of lenders and borrowers? So when I say lenders and borrowers, I mean borrowers who are obviously maybe facing tougher times than they ever were, and lenders who are obviously finding it difficult to kind of hold the rates at the, I mean, I guess they have no choice, but hold it at the current rates that you're forced to.
So, you know, the interest rate environment is determined, I guess, based on what monetary policy wants to achieve around inflation, growth and the currency. And the governor has pretty much laid out in his monetary policy statement that, you know, while the currency seems to be stabilizing, he is going to be focused both on inflation and growth as he thinks about interest rates going forward. The very tight liquidity conditions post July 15, obviously, and you know, the couple of steps that were taken to defend the rupee through interest rate and liquidity actions definitely hurt liquidity in the market, and interest rates went up by 300 basis points. So the move on September 20th actually does bring down cost of funding immediately because MSF is brought down by 75 basis points. but at the same time the repo rate was hiked. So I think the message that's coming through clearly is that while the currency-led liquidity tightness might be something that will go away, the RBI is going to focus both on growth and inflation. So we might not see a very soft interest rate environment. So I think we have to be prepared for the fact that interest rates may remain at this kind of level for a while, which means if costs of funds go up for banks, then those will necessarily have to be passed on to borrowers.
Right. What are your borrowers saying at this point? I mean, when I say borrowers, I mean really large borrowers, companies who are maybe in infrastructure and large projects.
So we're not seeing a lot of investment appetite at this point of time, and I think that's driven by some of the slowness that happened on project implementation in the last year and a half with the approval cycle. But the good news, Govind, is that that approval process is now beginning to move. And if we look at the Cabinet Committee on Investment, it is actually sitting together and helping clear those projects which have a backlog. So I think as the projects begin to get cleared, it's only after that you can hope to see new investment appetite. So at this point of time, what we're really seeing is, as I said, some progress on existing projects, and growth clearly slowed down for the economy, and with high interest rates, there isn't a whole lot of appetite for new investment right now. But I think that'll come. It'll come in due course as these projects clear up and growth comes back and interest rates come to a more moderated level.
So that's my next question. So what are the kind of time frames you're seeing for a turnaround, turn up, upturn, whatever? I mean, and looking at your own experience in similar situations in the past.
Govind, it's very difficult to predict because, as I said, it depends on all of those three factors, right? How quickly the old projects get moving, how quickly the growth rate begins to come back, so that entrepreneurs see that there's going to be return on their investment, and in that context, they'll of course be looking at cost of capital as well. So what happens to the interest and equity markets? I think that will get the investment cycle to move. So since I can't predict when each of those things is going to happen, it's difficult for me to give you a time frame.
So let me put the question differently as well, or two questions differently as well. So what is your biggest worry as a banker today, and what is your biggest source of encouragement as a banker today?
So our biggest worry really was about some of the logjam on projects, because that did two or three things. One is it meant that money which was stuck up in these projects was actually losing value, both for promoters as well as for bankers who might have funded it. Two is, if you don't get those projects up and going, then it hurts the infrastructure capacity of the country, where we are clearly underinvested, and that creates a constraint to growth across all other industries. And then of course, from a bank's perspective, it could impact asset quality if those projects don't move. So those were our concerns around that. But as I mentioned a little while ago, Govind, we're clearly seeing movement on that. So whether it's power projects or road projects, there is a concerted effort to make sure that that investment gets leveraged productively. And I think the situation could look pretty different, at least as far as old projects is concerned, in a couple of quarters. So we're actually feeling much better on that front. Then it's about growth, and in the medium to long term, we still very much believe the India growth story is there. We're riding through a little bit of a hump right now, but as long as that hump doesn't last very long, it's fine from a banker's perspective.
Right, Shikha, thank you very much for speaking with us.
You're welcome.
Thank you.